Hi, this is Noah Davidson here. Excited to be here participating in the Traders Guild. And I wanted to take a few minutes to do some show and tell for you on a trade that I placed last week. I started the process of identifying this trade with the broad markets, and I identified that the broad markets looked pretty soft and were ready for a drop. And I took it further and I looked at the sectors and industry groups, and I identified that the insurance sector looked really quite soft. So I then chose a trade seeker scan. I used the seeker, and I ran one of the advanced technical scans, and I ran a scan for slowing momentum short, basically to help me find stocks that were losing momentum and probably going to drop. And I specified that I scanned it on the insurance sector. I went down to the financials and I basically narrowed it down to the insurance sectors. Well, I wound up finding this particular stock, Allstate. And let me walk you through what caught my eye and how I identified this trading opportunity. The first thing I noticed was slowing momentum, which is a phenomenon where the distance between the price peaks is slowing down. And you can see that here quite noticeably in that last little run where we had some pretty good runs in price. And, you know, we had a good run in price, a pretty healthy run in price. And that last little run just wasn't that impressive. That is slowing momentum. Now, a lot of traders would identify this as a rising wedge, which is just fantastic. It's essentially another way of identifying a slowing momentum trade. And what a rising wedge is where the prices are trending up, but the peaks are getting soft, as in the slowing momentum, showing us that decrease in momentum is really the key to identifying this opportunity. That rising wedge is one way of doing that. Classic indicators can help you find this, and I'm going to show you one. A MACD, for example, real classic indicator, not my personal favorite, but it happens to identify slowing momentum relatively well. And what you'll see here is the drop in the indicator, the two moving averages getting ready to cross, and showing you a decrease in momentum as those moving averages converge, just as the indicator states. That is another clue showing us that slowing momentum. Now, I'm going to go ahead and remove the MACD and talk to you about how I would structure a trade on this. Now, typically, all you need to enter a trade is you need to have a trigger, a stop, and a target. And I would basically go through here and look at these candle lows and consider that a pretty good trigger. Stop losses you would probably place above either the candlestick high or the pivot high. And then targets, well, we base those on a couple of things. We'd base it on previous support zones, standard swing ranges. One of the things I look for as a pretty active trader is I want to know what the average true range is. And this particular stock has an average true range of 1.93. We're talking about $1.93, almost $2. So I'm going to go ahead and remove the ATR, and this thing almost moves $2 a day. And considering the fact that it's a $31 stock at this point in time, that's a pretty high percent return on investment even if I was just right for one day. Well, I'm going to walk you forward through this trade and kind of show you how it comes out. What you'll see here is a good trigger point. We'll call it a stop loss point, and a target. For me as an active trader, I'd typically shoot for 1 ATR, and that would put you down near 30. And a swing trade you'd probably be holding out for near 27.50, which would put you down a good swing range, maybe old resistance support zone, that kind of thing. Well, I'm going to go ahead and walk you through how this trade pans out. Well, the very next day it drops like a rock as expected, and I decided that it would be a good idea to possibly close out the trade because I had basically made the 2 points that I was after for the one day. And the very next morning I closed the trade out down there near $30 a share. So I was in and out very, very quickly, and I managed to grab 2 points. Now, let me talk to you about real quick return on investment here. If you were to take a 2-point drop and divide it by the $32 price tag that stock is, you're talking about a 6% return on investment for one day's work. And that's not too shabby. Now, I'm going to go ahead and show you what could have been possible had I personally exercised a little bit more patience and used a trailing stop technique. And what a trailing stop technique is when you lower the stop loss above the candlestick high, kind of trailing the stop. And I'll go ahead and march that forward. And you'll notice that the price continues to drop. And here we are at present day with the price could have been trailing stop, trailing stop, trailing stop, trailing stop, trailing stop, and still be holding the stock down here near 28. And now you're talking about a 4-point drop. We'll take the 4-point drop and divide it by the price tag of $32 a share, and you're talking about a 12% return on investment in 1, 2, 3, 4, 5, 6 days. Not too shabby. Now, that's obviously going to give you an idea in hindsight how you can use these tools to help you find opportunities to help you create nice returns on investment, and that's just using straightforward plain old stock. Hopefully you found this informative, and we'll create more content for you going forward here on the Traders Guild. Thank you.